trading.com. There's a bunch of different ones out there, so just make sure that you're staying on top of it. And this release does happen at 8:30 a.m. Eastern time, so you can go ahead and convert that into your time zone depending just before New York Open. So you can anticipate that, one of a few things could happen through London. We may experience less volatility. We may experience higher volatility through New York with people reacting to the data. And for this month, we are looking at a forecast on Forex Factory of 170,000 new jobs being added into the United States. So 170K is the forecast. If the actual release is greater than 170,000, that will be a positive indicator for the US dollar. And if it does come out below that target number that they're forecasting, that would be basically showing that the US dollar could be losing some strength. But we really just have to see, because again, fundamental news is just a tool. So I'm going to go ahead, I'm going to do a quick chart analysis, and I'm going to just prepare for the morning because it does happen, a little bit early on. So let me just go ahead. I'm going to actually condense this zone just a little bit. We'll make it nice and even. Let's see what that's looking like. So I am liking the look of that. It's a 50 pip zone. We're on the daily chart for the US dollar and the Japanese yen. So I'm just going to quickly drop these supply and demand zones according to my criteria, which you can check out in the trading courses on the Start With Trading website. So just sit back, relax, and let's prepare for some non-farm payrolls. So real quickly to wrap up this video, I need to make you aware of the fact that trading does carry a high level of risk. You can see the full CFTC disclaimer in the description of this video. However, just please keep in mind with that risk comes the potential to lose your entire investment. So just please trade cautiously. Make sure that you're demo trading for practice as well. And now I'm going to just give you a little bit of insight on why I have the bullish bias for the US dollar yen. Now you can see that we have been in quite a strong uptrend since about November, around the time where the presidential election was happening. So if we want to just zoom in a little bit here, this was actually the date where Trump and Clinton were getting the votes counted. So it was quite an eventful day. We had quite a lot of movement. There was about 500 pips on that one candle alone. And as you can see here, we've just uptrended to, I'm going to go from this low to a high of about 1,700 pips, give or take. So with that in mind, we are in quite a nice uptrend at this time. Now, it really all depends on how you choose to look at this. I am analyzing here on the daily, and what I'm personally recognizing is one of a few things. First and foremost, we do have the some people like to trade what's called M's and W's and the market waves and whatnot, but you can see here that we had two taps here to the upside at the 118,600 level approximately, and then we had into the start of 2017 just a nice little pullback here, and where we are at right now, that 113 level, very psychological level. And with the economic data coming out for this release specifically, it's going to be taking into consideration what happened in January. So I can imagine, because the new year just began, a lot of the time companies, that is when they do their hiring. So I can only imagine that many jobs were added to the US economy. However, this is speculation at this point more than anything, because of course I can't know what's going to happen until the release comes out, but you don't need to know what's going to happen to make money. You should formulate a solid bias based on several confirmations. My confirmations do include the supply and demand. We do have our targets here. We've got this nice little trend line here, but we can take it one step further if we wanted to, and we could add some Fibonacci. So we'll go ahead, we'll do that in just 1 second here. And a lot of traders, you may be wondering, how would you draw something like this? And it's really going to be different for everybody. What I'm going to do is I'm going to take a nice congruent zone down here at this whole 100 level. Let's get it as close as we can, just because this is a very psychologically powerful point. We had just a little bit of a dip into there. So we'll go from there all the way up to these highs. Let's get it on the psychological 118 roughly. We can adjust that just to make it nice and even here. Take out some unnecessary fibs. Set our color here. Just make it look a little bit nicer. And so as you can see, our first target is congruent here with the 23.6. Now, some traders, what you may have done is drawn your Fibonacci from over here in this high area down to where we are right now. And that could be a valid way. Remember, everybody's going to have a different way of analyzing. You're going to be able to see in depth my entire approach by checking out the training videos. However, this is just a quick, simple analysis for you guys. I am going to do more in the morning after London happens, just to make sure that my bias still is in place in those final crucial moments leading up to the actual data release. However, I will be looking for potential buys down at this whole 112.5 zone. We've got quite a few orders in here. The way that this formed particularly, I'll just highlight it for you so you can clearly see what I am looking at. This, to me, with the double tap just above our area of supply here at 112, this is indicating to me that we will be continuing on an uptrend. However, that does not mean that we may not get some quick spikes down back into the whole 112.7 to 112.5, maybe even 112.3. So we're just going to really have to see. I'll have my buy limits in place, going to have my stops just beyond the 112, most likely down here around 111.95, maybe a 111.9. We're just going to have to make sure that the risk to reward lines up accordingly. But like I said, our first target is up here at 113.75. So from where we are right now, it's about 75 pips. In the situation where we get filled on our buys down here, that would be a total of 125 pips to our second target. From where we are right now on the 113 level, we're looking at a total of 125 pips, and of course to the third target we're looking at about 200 pips. So if I were to go ahead and place a market execution right now, if I chose to put my stop down at that 111.95 area, I would be risking about 105 pips. So, that's not necessarily the best risk to reward ratio, which is why I'm choosing just to be patient right now, to let London session occur over these next few hours, give the market some more time for people to take their positions, and just put my limit orders in place. There's no need to force a trade in this particular situation. And I'm really looking forward to seeing what the morning brings. So we will most likely be going live. There's going to be a recording, and this video is going to be able to be used for your reference when it comes to back testing, checking out some different styles of analysis, seeing how fundamental news events play out in real time. And with that being said, I do appreciate your time. I value what you are doing here to stay committed to your success. And I would like to end this session off with some affirmations. So you can choose to repeat with me aloud or simply listen to them inside of your head right now. And these affirmations would be: I am a wise and successful trader. I am confident in my analysis. I am passionate about the charts and my continued education. I have more than enough time to allow the market to react to in whatever manner that it wishes to, and I have the patience to hold through periods of drawdown without feeling nervous, because I've predefined my risk. I am happy, I am healthy, I am loving, I am wealthy. This is Zachary Hogan from Start With Trading, also known as IZXTG. And again, I do appreciate your time. I'm looking forward to seeing what happens with NFP. Good luck, happy trading, stay safe, and most importantly, if you're not 100% confident, please use demo, because of the natural risk that trading imposes.